OK，咁今日咧，實在而家係過咗5點啊，即係收咗市㗎啦嚇。我就喺一間證券行裏邊，咁同一個佢哋叫做 investment advisor Christine Wilson，咁一陣間佢會介紹自己嘅，咁就同佢傾下偈啫嚇，咁。睇下你哋因為好多如果係嚟到移民，睇下啲錢係點樣擺啊，點樣存啊，點樣儲啊，點樣投資。咁我諗下，即係同一個喺呢度好有經驗嘅顧問嚟傾一傾嚇。Okay, gentlemen, ladies, and this is Christine. And so first of all, we have to I know that a lot of viewers would, if they come to Canada, they need some financial advice. But for sure, we are not here to give any financial advice. So if you need any financial advice, talk to your own financial advisors or planners. And I may ask Christine later to leave some of the information. I will put it on the site. So if you have other questions, you can email her yourself. So Christine, nice to have you, and we can have a little chat here. And first of all, there are titles about your professions. Way back, everybody, okay, stockbroker. And later it is not, then it changed into account executive, and later it's financial advisor, and there are somebody call themselves wealth managers. Can you tell us what are the differences in this progression, and what are the differences in various professions in your industry?
For sure. There's definitely been an evolution of job descriptions and titles over the years, and I think if you go back to kind of the 70s and 80s, you would have seen the term stockbroker, and it's been glorified in different movies over time, and
vivified.
Or vilified, Wolf of Wall Street, but. A stockbroker really designated a transactional-based kind of movement where you gave advice on a specific stock. Mm-hmm. And over time, the wealth management has evolved to really the product shelf has broadened, and there was the birth of the investment advisor. And the investment advisor is really an encompassing role that offers financial planning, insurance, estate, access to banking. An investment advisor can manage and handle all those different areas. Maybe not specifically, but there's access to different to different services through that. A wealth advisor is an investment advisor who has their insurance license. Okay. So sometimes you have an insurance broker who only sells insurance. Some investment advisors, usually called wealth managers, also have their insurance license, so they can offer assistance in insurance products and solutions, and also investments. And if you want to take the term investment advisor even one step further than wealth manager, you also might see now on some business cards a designation portfolio manager. Oh. And a portfolio manager is an investment advisor with some extra training who is able to manage investments on a discretionary basis.
Okay.
So traditionally, as a stockbroker or an investment advisor, I'm calling you as a client to get your authorization to buy and or sell. and I always need your authorization to do that. I cannot do it on my own without your agreement. A portfolio manager is able to manage on a discretionary basis.
So they can trade on behalf of the client.
That's right.
Before, without
without talking.
Even talking. So there's a lot of trust in that position.
There would be.
Okay.
There would be.
Yeah.
Yeah.
Okay.
Yeah.
So
there's two channels really too. So there's the insurance channel, and in the insurance world you would have one designation, and then there's the banking side of things. And in the banking side of things, whether you're an investment advisor or maybe you're working at a bank level, at a bank branch level, and you're selling just mutual funds, and so you could be a mutual fund representative as well. So there's job descriptions, but then there's also designations that you can have on top of those job descriptions, and sometimes they'll be noted on your card or on your website, but sometimes you need to ask as well.
So the education, training, and also their ability to trade stocks, bonds, mutual fund would be different based on those designation and education and their licensing.
That's right.
Oh, okay.
Yeah.
Okay.
Yeah, that's right. So.
Yeah. Usually when people think about, how and where they put their money, the first inclination is, okay, put it in the bank. Oh, that's how usually, most people, especially if they just immigrated to this country, first thing, okay, my bank has put money in the bank. So since you work for a brokerage firm or investment firm, which also owned by a bank, in your case, so are there other areas that people can put their money, or any vehicles, revenue, people can put their money, and as I just said, bank, this investment firm is owned by a bank, so are there others?
Yeah, I think just like there's lots of different ways to describe what investment professionals are called, there's no denying that it can be very confusing, the different types of firms that you can work with. So, you basically in Canada have three choices. You can work with one of the big banks, you can work with a boutique firm, an independent provider of financial advice, or you can, again, go through an insurance company. And so at the big bank level, there are lots of options with even in just the bank level. So at the bank, there are 5 different areas that specialize in investment. So you can walk into the bank, you can get advice at the branch level. At that level, you're working with somebody who's mutual fund licensed.
Okay. So they cannot sell stocks.
They cannot sell stocks.
Okay.
At the bank, you're primarily getting just the mutual funds from the bank. Each of the big banks in Canada also has an investment dealer or a wealth management firm, which is where I work.
Yes. Okay.
So at that level, it's a full service offering. There's a lot of products in that you have access to that are different from the bank level. There's also private client divisions of all of the banks. And at that private client level, you're getting access to some of the bank's discretionary managers and solutions.
Okay, so they don't have to call up the clients, should I buy this for you or sell this for you?
Again, that's right, yeah. So, and it's, it's an in-house kind of high net worth offering for bank clients if they don't want to go to the brokerage side. Each of the banks also has a discount broker, which is a do-it-yourself solution. if you are confident in making the investment decisions yourself and you know what you want, you can go to the discount brokerage side of things and transact most of the same products yourself. But that is their do-it-yourself.
Yeah, that's why it is a discount.
That's right, online do-it-yourself. And something that's become quite popular recently is you hear a lot about robo-advising.
Okay.
So a lot of the banks have made investments in different robo firms as well. And the robo offering are investment strategies that have algorithms that kind of do the management for you on a discretionary basis through exchange traded funds usually.
Okay,
so
but usually those are like use the computer to make a decision?
So there's usually, you would probably answer a questionnaire based on what your objectives were, and you would get a portfolio of ETFs that were rebalanced for you. There would be something that would trigger a rebalance most likely. But the robo-advisors are usually an ETF-based strategy that, again, like the discount earn, it's kind of a pick it yourself.
Okay, so still the person still has to make a decision, not a
just make the decision based on what their objectives are.
Okay.
Are they want low risk? Do they want growth? Or they like a balanced strategy? Are they prepared to take high risk? So you kind of check the box on what your objective is for your money, and then the robo strategy takes the rest of it under consideration. So the boutique firms invest, independent channels, you'll see them as options, as well as, the insurance companies. And, technology has made access to information a lot better than it was 25 years ago. So really it comes down to the level of human contact that you want, and the level of comfort that you have in making the decision.
So, if somebody new to this country, what should they look for if they want a independent or financial advisor, credential-wise, training-wise, and what should they look for?
Well, I think whether you're a newcomer or a Canadian, there's going to be a price tag to admission for all the different options. So really, I think what the best point of contact at the start is to go to your local branch, and they should be able to direct you to the best fit. It will be very important when you go to the bank that you're able to communicate what your goals would be for your money, or what your objectives are for the strategy that you want. And as long as you can do that, like they should point you in the right direction, given that the banks own all the different types of, or have access to all the different types of strategies. So the business is very competitive. There are a lot of great firms. So I think it just makes sense to find the right level and the right professional that you're comfortable talking to. And I don't think that you should settle on your, you should be 100% comfortable with your relationship with the person that's giving you financial advice. So just like you would trust your professional doctor or your accountant, or your lawyer, communication is important both ways, and the more that any individual understands what your objectives are, the better you'll be get kind of slotted into the right spot. And then it just comes down to, if you have a specific goal and that person has experience in that goal, they or in that area, they should be able to help you. So the designations that you see after names sometimes, it is a good thing if you're interviewing somebody maybe ask about.
Okay. Maybe after this you tell me, well, you can give me a list of what type of designation, what does it mean?
Yeah.
Then I can put it on my channel, on my
Yeah,
site.
yeah. So there's financial planning designations. There's
Okay.
retirement planning and projection.
Okay, so they are different.
They can be different.
Okay,
So, yeah,
I see.
Yeah.
So for you, what type of investment do you handle yourself?
Yeah. So I have access to the entire marketplace.
Okay.
Being an investment advisor with my license. So GICs,
Okay.
guaranteed investment certificates, bonds,
Mhm.
individual bonds, individual stocks,
Okay.
mutual funds
Mhm.
that invest in the bonds and stocks,
Okay.
exchange traded funds that trade on a stock exchange. I also have a designation and a license to trade options.
Okay.
So different option strategies, and like I mentioned, I've got my insurance
Oh, okay. Yes, I
designation as
forgot
well.
that.
So
I
I
forgot
do
that, yeah.
have my wealth management
Mhm.
title. Yeah.
Okay.
So in addition to all those different products, there are solutions like discretionary strategies as well that we can access at the full service level. I
Okay.
personally do not have my portfolio manager designation yet,
Okay.
but I would have access to also institutional style investors
Okay.
that retail investors can access on a discretionary basis.
Oh, I see.
Yeah.
So, and what is the process when you recommend a certain investment to your client? What do you have to think about, and what do you expect the client to? What type of information you expect the client to give you, so you can give proper advice?
Yeah. So personally, I have a 4-step process that I try and go through with every client. And the first step would be, and I've stressed it earlier, is understanding.
Mhm.
And so I want, the more information I have, the better advice I can give, and the better decisions I can help you make. So I want to understand your goals and your objectives, maybe your preferences for what types of individual investments you've had experience with that have worked well, that maybe haven't worked well. I want to also help individuals identify maybe areas beyond just traditional investing that can help them, with their overall plan. And then I want to help an individual be able to put their personal thumbprint on it.
Okay.
So, I want to help you have a personalized portfolio that will reflect your different risk tolerances and your objectives.
Yeah.
So, I'm going to spend a lot of time trying to understand what the goals are. Then I'm going to really kind of plan the next step. I'm going to take the information that I learned. I want to work to, craft a portfolio and a strategy for either the individual or the household. Then, the third step would be to act. So take action on the recommendations that were made. So if you have maybe some legacy investments that you're holding, decide if it makes sense to keep those as part of the strategy, figure out tax efficient ways to move them maybe into a new account, and really just, if it makes more sense to phase in recommendations, do that. So, I've understood, we're going to plan, we're going to act, and then really just monitor and adapt portfolios. So monitoring would be, could be meeting on an annual basis, talking quarterly, reviewing the strategy that we have put in place, see what's working, see what's not working, see if adjustments have to be made. there could be changes in personal situations that might make an adjustment important. Unexpected things happen from time to time, right? Whether it's job security or health, and so I really just want to modify and be able to make changes. So, the process is really just goals based, and then finding the products and the solutions that are the best. Like there's a lot of information in the markets, and I want to help take that information and synthesize it all so that you can make the best decisions with the information that you have.
Okay.
Yeah.
It seems since you have to work closely with the client has to work closely with you and all that. So and also you mentioned before, there is a price of admission. What is for you, just for you, what do you think the minimum of somebody who phoned you up and said, well, I would like to open an account or have what is the minimum price of admission, at least for you or for some other advisors?
So everybody's is going to be a little bit different. Personally, I've got 2 criteria. Okay. My first criteria is an investable assets criteria, and it's usually based on a household. And for me personally, that's $250,000. For me, my objective would be really to work with families. So at different generations, like I want to encourage, whether it's, direct relatives or maybe brothers or sisters, or, I want to take a multi-generational approach to things. And so, and there's an incentive, with the household minimum that maybe a younger generation might not have access to, a full service advisor at that level if you're coming in individually, but if you're coming in as part of a household, it can be a great benefit.
Yeah.
So I would always encourage kind of working with families. I would say my second criteria personally is attitude. I want somebody to have a plan and stick to the plan, and somebody who's willing to take advice, somebody who's willing to pay for the advice.
True.
Yeah. So I want it, so a lot of it is about assets, at a certain level, but its attitude is equally as important for me.
Okay. Since you mentioned about that you, of course, need to be compensated for your advice and all that, what are the various types of fee structure? How do you get paid, or how do you expect various ways to get paid?
Yeah. Fees can be a very sensitive topic.
Yes.
You see a lot about them in the news these days too. For me, it's very matter of fact. I mean, there are 2 options. There's merits to both of them, and the reality is, I believe it comes down to what you as the client are most comfortable with, you as the investor. So, 20 years ago, there was only one way to do business, and it was commission based.
Yeah.
So it was
a percentage of
a transaction. So if you buy something, there's a cost. If you sell something, there's a cost. There's a standard rate that's charged on any transaction. Sometimes it varies based on what, the number of shares, the cost of the overall purchase, but there's a standard recommended commission that would be charged, at a transaction level. The pro to that strategy would be, if you're a buy and hold investor, you're as a percentage, it's probably going to be quite low if you buy it. and
Okay.
hold it for 5 years.
Oh, yeah.
Or 10 years, or
Yeah.
forever. But you know, I guess one of the cons in that strategy is it might be harder to keep somebody engaged in your account if there's not activity.
Yeah.
So, you know, that's just the reality of if you feel like there's been an evolution in the industry to kind of move towards the second option, which is a fee for service. And I think as the industry has evolved and wanted to incorporate more components of investment into your experience, whether it be financial planning or projections or estate issues and estate services, and there is definitely a move in the industry now to have it be a flat fee, and the fee is usually a percentage of the value of the account.
Okay.
And it varies based on the size of the account, and there's exceptions that are made for different asset classes within the portfolio. Sometimes that fee can be deductible. In my experience, it could be less to do it on a basis, on a flat fee for service basis, but it really comes down to what the individual investor is looking for. And not everyone offers those two options, the commission-based and the fee for service anymore. Yeah, some won't take a commission-based account anymore. Some investment advisors.
Okay, so only a fee-based percentage of the portfolio.
That's right. Yeah,
Okay.
some will only take. So that's changing a bit in the industry. You might not be able to find someone who would take a commission-based account anymore at an investment advisory level. Yeah. So.
Of course, when somebody invests, the first thing they always think is, no matter what you do, don't lose money. The fee-based, commission-based, doesn't matter, just don't lose money. How safe are the investments?
Right, yeah. So really there's savers and investors, and it comes down to risk at that point. So if you're saving for a trip or a house, you want there not to be any chance that the value of your investment will go down. So that will dictate what type of investment that you're in. But if you're saving for something like retirement, you might have a different risk profile, because you want to be sure too that there's growth over time to keep up with purchasing power and inflation. So what you can control for longer, medium and long-term investing is really the asset allocation. And so the asset allocation being the mix of no risk investments like GICs and maybe money market, medium low risk investments like bonds, and then higher risk investments which tend to be like stocks. So it comes more down to controlling the mix of the different asset classes. And again, that will be different for everyone based on their comfort level and experience and history. And so to me, it's you can control that asset mix. You can't control what's going to happen in the markets. You can't control the noise in the markets, the news in the markets.
Yeah,
you can't
happen.
control what's going to be said on Twitter. You can't control where interest rates are going to go, where foreign exchange is going to go. So you control what you can control, which is the asset allocation. I would say as an investment advisor, one of the biggest determining factors, in my opinion, that an investment advisor might have on the overall success of your investment strategy is helping you control your behavior.
Okay.
And so you can have a positive impact on that client if they're worried about what's going on in the markets and maybe stopping them from, you know, from changing a strategy that doesn't need changed.
Okay.
And so if you have a plan and you know what you need to help you get to that plan, then you can measure the investments over time
Okay.
against the strategy.
Yeah. And well, maybe when we are done, and you can leave some of your information here, so I can put it on my site so people can give you an email or
Yeah,
something.
I'm happy to answer any questions for
Okay.
that individuals might have. I mean, obviously, it's something that I really enjoy doing, and I'm passionate about the industry, and think everybody deserves to find the right fit for them.
Okay, thank you very much.
Thank you.
Yeah.
Thank you.
Thank you.
Thank you.